Hey, Dan Passarelli here. Happy Thursday. And it's an interesting Thursday, isn't it? Yes, I'm recording this about 45 minutes before the close when the S&P 500 is down just a smidge over 4%, putting us well into correction territory. And I heard that earlier today, the Russell actually ended up in bear market territory, which is down 20% from the high. So, interesting market indeed. So the question obviously becomes, where does that leave us and what do we do about it? Well, first of all, as some of you who are more experienced with option trading know, this is an option trader's dream market. We love this volatility. It enables us to use options for everything they're designed for, trading that volatility component of it. The wheel trades are fantastic in this sort of market. Your long-term investments, those are more challenging unless, of course, you're doing the wheel on those. But, hey, look, all that said, what do we think about going forward? Well, look, it was a pretty bold move by pretty much anybody's measure of just how big these tariffs were and how reciprocal ended up being defined, which I think probably caught a lot of people off guard, which is how we end up down 4%. So there's basically one of two things I think is likely to happen over the next couple of weeks. The first thing is, hey, maybe this strategy of Trump's for negotiating better trade deals and such, maybe it works. And if it does, I think we can see, and if it does, it's going to work with one country at a time. So it's not like the market just jumps up 20% in a day, because Trump would have to make those deals with many people. But if he locks in a deal that's acceptable, that'll be good for the market. And it would lower volatility somewhat, put people's minds at ease that maybe the plan is working. And if that doesn't happen, then it is a wait and see game on exactly how it affects the economy. We have the monthly non-farm payrolls tomorrow, which we were already sort of on pins and needles about. What is going on with the tariffs won't go into effect into tomorrow's number, but it'll give us a sign on what was going on before those tariffs took effect. And then we've got another month to, probably it's a couple more months to see how these tariffs take effect. So, boy, we ended yesterday with a lot of unanswered questions, and now I feel like we have even more unanswered questions. But one question that I don't have is, how's the VIX doing? And the VIX is up, I would say, about where it should be right now, sitting at about 28 as I record this. I use the VIX for observation purposes. You can trade futures on it, but they're a little bit different. The VXX is the more tradable instrument, and that just made new highs on the day here. We're sitting here at the high of the last 6-month period. We did have, when we had all that craziness back in August of last year, we did see the VIX spike even higher, but this to me seems like a fundamentally different situation. That was caused by, a lot of folks believe, including myself, that big move last August was caused by a lot of the negative gamma from some of the big institutional premium sellers out there, and it ended up a more surprised move. This move here today, not so much of a surprise, really. There were some things that were a little bit surprising. We knew that the tariffs were going to be announced today. We knew that some of them were going to be. We got a chance to think about it overnight. So I feel that it's unlikely that we get more of a big spike higher in the VIX over the next week or so. But it could still rise again if some of the numbers start looking bad. So a lot of stuff there to think about. I hope that helps. This is Dan Passarelli, Trade Smart.